Yo, what is going on, guys? Can you hear me? Let me know in the chat if you can hear me. Finally, good to be back.
The Federal Reserve System works every day to
Oh,
support a growing and stable U.S. economy.
I think they're about to start. Finally, good to be back live streaming in the studio. Guys, hit that thumb. If you were here, hit that thumbs up. Fixing his hair for the camera. Dude, you should see my hair right now. My hair is really long, which is why I'm wearing a hat. All right, guys. Yeah, hit that thumbs up if you're on this. Once Jay Powell starts talking, we will get into it. And I also want to obviously answer any questions that you guys might have about the markets, about trading strategies. And if you are part of the academy, check out the trades in the chat below. I know some of the analysts have already sent out some day trades. Blah, 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 4,000 call. Sorry, guys. I'm just putting in my trades. I bought the 4,000 call in the SPX, the 0 DTE ones. And I ended up selling those for 100% earlier. And now they just dipped, so I'm looking to get back in. All right, nice. Looks like we're up 50% on those already. So I had an order that filled in at 85 cents. And those are currently up at $1.32. Now, if those become in the money, if those 0 DTEs become in the money, I mean, look at in the money. Sorry, I'm looking at Microsoft for some reason, but look at in the money SPX calls, and you could get a sense for if those 4,000 calls become in the money. You know, you're looking at $2,000 to $3,000 a contract, and they cost $85. So obviously, nothing is guaranteed. There's going to be so much volatility here. As the FOMC meeting goes on, obviously, you guys know the implications of this. The implications are, what is the Fed going to raise rates by? Are they going to raise rates by 100 basis points or 75 basis points? That is really the big question of the day. Also, they're releasing the economic report, which is going to give a sense for whether the economy is expected to grow or not, the state of the economy. And we're also going to get language on the balance sheet runoff, right? So, we're going to see how aggressive the Fed is going to be. Roman Kachuk, thank you so much for donating $50 to St. Jude's. Proud and Real says crashing. I mean, if you don't know how the market goes in previous FOMC meetings, you could see that we get a drop. Actually, you know what? One of our analysts took some of the data that we've been putting together and put a really good analysis together about how the markets move right before FOMC and right after Powell starts talking. So shout out to Dr. Flox for putting this together. But you could see between 2 and 2:30, which right now it's 2:04, the markets always drop. 2% down in March, 2.2% down in May, 2.2% down in June, 0.6% down in July. And those are the triple Qs, and you can see the numbers here for the S&P, very similar. And then after 2:30 to the end of the day, you tend to see a close. At least every single time this year that they've raised rates, the market closed higher than it opened. So you're going to see a lot of volatility. So all of these, messages about it's crashing or it's rallying or it's crashing or it's rallying, I mean, that's going to be typical. You're going to see this all day up until the market close. It's just natural. So these are really moot comments, to be honest. And obviously, if you don't want the volatility, you don't trade a day like today. But if you can get in optimal trades based on previous trends, then that is, that is what you want to take advantage of. Nothing is guaranteed at all, right? Nothing at all is guaranteed. But if you're trading based off of historical trends or based off of trends that are still in place, then you give yourself the best shot. 2-year treasury, 15 basis points up. Yeah. The 2-year treasury is the one that's affected the most by interest rate hikes. Because remember, the Fed funds rate is a short-term rate. It's not a long-term rate. A lot of people think the 10-year is what's directly affected by the Fed funds, but it's not. I wonder if the news is out yet. Let me see. Market watch. Usually you'll see a big breaking news thing. But honestly, for me, like, we already had 100% trade on the SPX calls earlier. I was kind of gambling with the group earlier, front running the FOMC. But the 4,000 SPX calls were trading at 85 cents. Ended up selling them for like $1.60. And now I'm back in when they're cheap. I'm going to trade this based on historical data. Now, obviously, if Jerome Powell comes out, and what we're going to be looking for is twofold. What you're going to be looking for is the rate hikes themselves, and then the language, right? We're going to be looking at the language about how aggressive the Fed is going to get. Now, if it's something similar to what he said at Jackson Hole, then I don't think that's going to move the markets much. If it's something new, if it's new information that we haven't heard before, if he comes out with some new bars, if he comes out with a new track, a new 16 that we that we haven't heard before, then I think at that point, the market can actually be affected, especially if it's hawkish language. And he says, we're going to be hiking for sure from now until the end of the year with no pauses. Then I think that the market can actually take a hit because of that, right? Also, if they raise by 100 basis points, I think the market will take a hit as well. So keep that in mind. Let me get to your questions, actually. This is going to be brutal one way or another. I'm not sure what that means. Gunmetal, I'm going with a call on no hat today. No, I got a hat. My hair is looking crazy. I'm growing it out. So 1% to shock the market. I mean, I don't think their goal is to shock the market, right? That's not the goal. Their goal is to try to tamp down inflation while also maintaining some semblance of credibility. And something that they've actually struggled with this whole year. So, their goal is not to shock the market. A lot of people today are talking, like, I see this on the discourse, whether it's on YouTube or Discord or Twitter. People are like, oh, everyone thinks the Fed's going to do 75, so they're going to come out and do 100. No, their goal is not to dupe you. Their goal is to fight inflation and maintain some semblance of credibility after losing a lot of credibility because of their lack of action, the last year or so. So, their goal is not to come out and surprise everybody. Last Fed rate hike, everyone thought they would do 75, and they did 75. The time before, everyone thought they would do 75, and they did 75. So it's really, what is expected can often happen. The markets aren't just looking to dupe you. You think they're looking to dupe you because most people trade inoptimally, and they take trades that they shouldn't trade, that they shouldn't take, and so they think the market is rigged, right? But in actuality, you could take really any trade anytime you like. Nobody's stopping you from doing that. So, all right, let's see. I want to be buying some more calls here. What is going on? All right. Let me get to your questions before Jerome Powell talks. We buy calls now. Um, John, if you're an inexperienced trader, I would say don't trade this day at all. I'd say fuck it and raise 200. Yeah, okay, Miami Elite. Very realistic. I traded SPY twice today. Juicy Green. Yeah, you and me both. I didn't trade SPY, I traded SPX. Yahoo says 75. Is it true? Did they release it already? I don't know. Market Watch usually will have the actual breaking points. Let's see. All right, here we go. Fed raises rate by 75. It's on Barron's. Fed raises rate by 75 or 0.75%, 75 basis points. Watch for signals on what's next. So we're going to be looking at the economic data. We're going to be looking at what they say about the balance sheet. But yeah, I do think that, again, everyone expected 75 and they raised it by 75. So it's not like the market here is set up to dupe you. That's not what's going on. All right, let's see. We're trading right now at 38.40. Markets are down. This is typical. For those of you that are just joining the stream, again, we did an analysis on this. Between 2 and 2:30, you see a drawdown. After 2:30 to the end of day, the market turns green. Each and every single time this year, each and every Fed rate hike this year, you could see the NASDAQ on the left, the S&P on the right. This is very typical behavior. And yeah, if you are up for some risk, this is when you want to take advantage of the risk. This is when you want to, play call options if you believe in this analysis, or you want to trade bullishly, right? Now, here's the snag. Going so far out of the money on 0 DTE, meaning 0 days to expiration, if those options stay out of the money by end of day, they're going to be worth 0. So just know that. All right. So on the 4,000 call, you can see our analysts here in the academy. So bought the 4,000 call at 75, already sold it at $1.35. Same thing on the Qs. All right, forecast 4.6 now, no cuts, power down, then recover. Yeah. I mean, again, someone's saying dump time, but look at the data. Look at this. If you want to take advantage of any bullish calls, this is when you would do it, right? Like right before Powell starts talking at 2:30 p.m. Eastern time. All right, let me get to your questions. Sorry, I was just putting in trades. All right. 75. So everyone's saying 75, 75. Yeah, I see it here. 75. Let's go through this. Let's read this and then I'll get to your questions. Do you guys have any questions? I mean, I just see people posting 75. So it says the latest increase brings the Fed's main policy rate up a range of 3% to 3.2%, the highest since early 2008. So they raised by 75 basis points. That was expected. As I was saying before, there's really nothing for them to gain by raising a full percentage point by 100 basis points that they can't achieve with 75 basis points, especially since it's a back-to-back-to-back 75 basis point rate hike. It comes after recent consumer price inflation data came in hotter than expected, blah, 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 and more results strong demand than supply problems. Leading up to the August CPI report earlier this year, many on Wall Street had expected the Fed to slow its pace in September. This is actually true. There was a lot of commentary saying that the Fed might slow in September for this actual FOMC meeting today. However, as you know, as you know, inflation came in way hotter than expected. So there's no way that was going to be the case. Now, what they do in November, because remember, there's no FOMC rate hike or there's no FOMC meeting in October. So what they do in November is they could slow. And especially if October CPI comes in lower than expected or as expected, which I think will be the case since prices are dropping like crazy now. But anyway, let's go through more of this. Investors will get some clues in the central bank's updated summary of economic projections. So this thing is the other, really the other shoe to drop, or the other thing we're looking for here is the SEP, because it's going to give us forecasts of, where we're at, where interest rates are going to be at, where they think inflation and unemployment are going to be at. So we'll see what Powell has to say about that. I think the SCP was already released. I'm going to look for it while we're on the stream, but I don't want to miss Powell talking in about 13 minutes. So the rate increase, the Fed is likely to lift its main policy rate by another 0.75 of a point. That would mark the third consecutive, blah, blah, blah. Okay. New dots. When the Fed last updated its economic and rate projections in June, it said officials saw a terminal rate below 4%. More specifically, showed rates topping out at 3.8% next year and falling to 3.4% by 2024. A lot has changed since June. Blah, blah, blah. The worse than expected CPI report in August prompted traders to be a more aggressive Fed this year, as many economists raised their terminal rate predictions to 4 to 4.5%. Fresh economic forecast. Given the recent data and likelihood of a higher terminal rate, the Fed will probably lift inflation forecasts, raise unemployment estimates. Of course they will, because they know that their rate hikes are going to put pressure on the labor market. For sure. For sure will put pressure on the labor market. Okay. Economists at Citi see an increase to 5.7% in headline PCE this year, up from 5.2 in March. Okay. If Citi's right and the Fed continues to provide economic forecasts that are effectively at odds with 2% inflation, markets could take a dovish cue from new SEP and question a more hawkish dot plot. All right. Let me get to your questions before Jerome is about to talk in about 10 minutes. Guys, yes, I know it's 75 basis points. I know. All right, let's go to CNBC. Also, do you guys have any questions? All right.
He out-hawked the hawks. Long-term rates above rates above 4.25% by year end. With us now, Frederick Mishkin, former Federal Reserve Governor. Mr. Mishkin, welcome. Good to see you. You believe that we got here because of policy mistakes made by the Federal Reserve and the fact that they had to play catch-up. Are they playing catch-up too hard right now? No, are they doing the right thing?
So, I've been very critical of the Fed for well over a year on CNBC,
yes,
because I think they needed to do much more. And in fact, had an op-ed in the Financial Times in January saying that their policy framework is flawed. But I had a recent op-ed, and the Fed has now turned the ship around, is doing exactly what they need to be doing. That they have to be tough, that their rhetoric is now exactly where it needs to be. The good news is that inflation expectations have responded to the Fed's toughness and actually have receded somewhat, which is very good news. The problem here is that the likelihood of a recession is very high. Soft landings are just not possible or very, very unlikely in situations like this where you've made some mistakes, you've gotten behind the curve, and now you got to do catch up. And what that means is that the Fed's got to keep on being tough, and a recession is very likely to occur, and there's going to be a lot of pressure on the Fed to ease off. In fact, the markets had been thinking that once the economy starts to slow down a lot, a recession occurs, that the Fed will back off. That would be a huge mistake. And I just had an op-ed in the Financial Times about a week ago saying that people don't remember that Volcker, the tough guy Volcker, actually blinked in 1980. And as a result, the Fed had to raise rates by much more than they otherwise would have. We had an extremely severe recession. And so if the Fed basically blinks and is not doing what it's doing now, which is talking tough and convincing markets that they mean business, then the problem will be that they'll actually have to raise rates by more and more severe recession.
What are you guys talking about? What the hell are you guys talking about in the chat? I'm just looking at you. It says, based on your last vid, some 20 hours expectations for market to have a bounce. I mean, it's in the video. Like, I outlined all of the analysis in the video. There are no gurus, folks. Not sure what he's talking about. He's a guru, bro. Traveling trader's a guru. He's a god. Guys, what are you talking about? This is all just analysis. Like, when you look at stuff like this is all just compiled data. That's all it is, right? And you trade based off of data. Now, obviously today is a very risky day, right? So if you're not experienced and or you don't want the volatility, you don't trade on a day like this, right? But if you want the volatility, you have the historical data, and so you just base it off of a good risk to reward trade. When the market tanks between 2 and 2:30 p.m. Eastern time, and you find it at a support level, then, if you were not risk averse and you wanted to enter a trade, then that's when you would optimally do it, right? But if you are risk averse, if you don't have experience trading, today is not the day to take a chance, right? Today's not the day to take a chance. Call or put today. I'm not even going to dignify that with the response. Like, you have all of the data here. All right. Should we wait for 2:30 exactly to scale into calls? I mean, Joshua, honestly, if you're asking a question like this, in all honesty, and I'm not saying this derogatorily. I'm saying in all honesty, if you're asking a question like that, you probably shouldn't be trading today. Like, you should be paper trading, get your feet wet, look how the volatility of this stuff moves, get used to that volatility, and then you will be set up for the next binary events. But what you should be doing is really looking at the chart like I'm looking here. So I'll show you what I'm looking at. And, based off what you see on the chart, you then want to, make trades based off of that and based off the historical data. So right now I'm in a futures trade. You can see how much this is jumping up and down, right? Like, we're up 175 on one futures contract now, but I'm taking a look at the chart very intently to see, what goes on. But this is the low of the day. And when I combine this with all of the data that we have compiled here, showing that the market usually between 2 and 2:30 is somewhere between -0.5 and -2% down. And I look at the markets now, and the markets are down, 0.6%. This is generally when I want to enter a trade. We're up $250 on this futures contract, 260, 250. This is one. And I'm going to start scaling in. And this is other than the SPX calls that I took earlier. Up $400 right now. I could close this out if I wanted to. I could just hit buy market and lock this in. 450, right? This is one futures contract because I took it from the low of the day, and I'm wanting to play this bounce up after Jerome Powell speaks. Now, the advantage that you have trading futures over options is that futures don't have theta decay. They don't have implied volatility decay. They don't have IV crush. what you see is what you get, right? You're basically looking at a face value. Santos Draco up 400. Did you tell the group about this move? I mean, dummy, I'm on the live stream. How would I tell the group? But obviously we have the day trade alerts here. You could see them. There's all of these alerts that are coming out. So yes, you could see long ES at 38.43. This was actually right near the price that I got it, right? You don't need to come at me in the live stream just because you missed a trade. Here it is. I got in at 38.44, right? So the group got in even at a better entry than me because we longed it at 38.43. And I was doing the live stream for you guys, so I got in at 38.44. So no need to come at me on the live stream if you missed the trade. I can't, live stream and try to alert it at the same time, which is why we have multiple people alerting it. But yes, it was told in the group. And here's the trade right here. So, you could be mad at me all you want, but all right. Santos, I was just asking. You've been taking shots at me all morning, bro. I've been seeing your chats. But it's fine. You can come at me if you want. But yes, the trade was sent out. And yeah, you can close this trade out now. I mean, each contract is up $700 now. So yeah, we bought it literally near the low of the day. So for me, I'm going to wait until Jerome Powell starts speaking. We have 3 minutes until he starts speaking. So let's do that. No one should be mad at this. He can't make it any easier. Yes, I'm trying to live stream, give you the information. And also, we have a group of people that are sending out alerts. You could see here, trimming at 38.59. So if you already got in, this is when you want to start trimming. All right, let's watch Papa Powell. Santos, no hard feelings. I love you, man. You can come at me all you want, but booty calls until the end of the day. Domingo, remove the hat. The public needs to see. No, my hair is very long right now. Will you announce when you scale out of your calls? Oh my God. Oh my God. I'm gonna go crazy. It's in the Discord. It's in the Discord. I can't live stream, give you analysis, and try to manage your trades for you. I don't like you, TTT. I love you. What's up, Omar? Trading is like boxing. You're going to get hit. Z, the group couldn't have tried harder to prep everyone for today. Yes, of course. I told you I wasn't trading breakouts in the morning. Gave you all of the data. The entire group came together compiling all of this data for you, telling you exactly what happens, exactly what happened every single time before the FOMC, what we're trading. Right now they're working hard to send out live alerts. I mean, I don't know what to tell you. And by the way, guys, there's only a few spots left for September. So after they're gone, it won't open up again until October. So hit that link in the description if you want to be part of the group. Just banked 700 on one futures contract. I'm personally going to be holding until we see what Jerome Powell says. I like the volatility. I'm okay with it. But yeah. Damn, he's usually not late. Biden's always late. Jerome Powell's always on time. Let's see what he says. Could you break down each section on the Discord, please? Yeah, later. After we hear Jerome Powell. All right, here he is. I love you guys, by the way. I'm just messing with you. And yes, it's okay if you want to take shots at me. I do this publicly, so that's fine. All right, let's see what's what. And I bet you Steve Leisman from CNBC is going to ask him questions about a recession like he did last time. Let's see. The Pokemonji bought ADA future. Hopefully you're not talking about Cardano. Ooh. All right.
Committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the Consumer Price Index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025.
The futures contract is up $1,400 per contract right now.
Inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored. as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job.
Damn, we just banked $2,000 on those futures, on those S&P futures, and I'm about to go back in. What do you guys think of what Jerome is saying?
Inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time that you could see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive to bring inflation down.
Why would you buy puts, Blue Chip Joe? You have all the data in front of you. Why would you buy puts on a day like today? Plus, puts are going to be super expensive today, but these futures are up thousands of dollars now.
We'll just have to see how that goes. There is a possibility, certainly, that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today, we've just moved, I think, probably into the very
3,900 is a huge level for the S&P 500. It's been a major resistance level for 4 days. If we can get above that, then it's off to Rocket Town.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is?
All right, market is rocketing. Market is rocketing. Hopefully you guys got in your calls. Hopefully you got in your futures. Hopefully you got in all the bullish plays. Market, again, now is 1% on the S&P 500, 1.3% on the NASDAQ. I mean, this is amazing. So for everyone that said, and I'm not blaming you, for thinking like this, but for everyone that said, oh, that seems too obvious, that seems too easy, again, if you're just basing your trades off of historical trends and you have a good risk reward ratio, and you get in at a point where, you know, you can hold the trade until it becomes optimal, and you have a good exit strategy, then that's, you know, you set yourself up for success, right? So for those of you that were saying, oh, it just seems too easy, blah, 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 blah. I mean, we had the data, and the data showed us that this is what was going to happen, and it happened. So hopefully you guys made a lot of money. Amin, thank you, man, made me a lot of money. Yep. You know, you and me both. And I hate, by the way, I hate trading when I'm live. And you can see why. It's because I like to give you guys attention. I like to give you guys, you know, I like to give you guys information. I like to be engaging with you. I like to answer your questions. And when I'm trading live, I just feel like I don't have the ability to do that. It's just a lot of staring, you know, at the screen, looking at my trades, looking at the charts, and I just don't think it's engaging. So, but, you know, if you guys do like it, if you guys do appreciate that type of content, let me know and I'll do more live trading. But as suspected, the S&P 500 up 1.26%, NASDAQ up 1.65%. I mean, this thing is absolutely rocketing. Those futures contracts are now up, what, like $2,500 per contract. So, you know, for those of you that are in the academy, hopefully you guys banked. You know, I tried to give you the plays here before Jerome started talking, but yeah, there it is. And I hope this is a testament for people that, you know, especially for newbies that, you know, we're saying, because I got this a lot today, especially today, you know, where people were saying, oh, it's too easy, this can't be it, everyone's expecting a pump, or, you know, everyone's expecting the market to go up, so it's going to dump, or everyone's expecting 75 basis points, so they're going to do 100. I mean, that's not how it works. It's not some, you know, hocus pocus that's meant to dupe you. You have analysis, you have historical data, you have your risk reward set up, and then you take a trade based off of that. That's literally it. It doesn't matter, you know, you having some sort of anecdotal idea that the counter trend is going to happen just because everybody's expecting something else to happen. That's not how the market works. The market works off of data. The market works off of analysis. It works off of a historical precedent. It works off of pricing in of information. You know, once Jerome Powell stops speaking, all of the information is priced in. So, you know, it makes a lot of sense that the market would rally, because now they heard what he had to say. The 75 basis points is priced in, and now the market rallies and you take advantage of it. So, you know, I hope that you can get out of this counter trend mentality, this anecdotal counter trend mentality that, you know, they want you to lose, so they're going to surprise you and pull the rug. No, they don't care about your little account. They don't care about my little account, right? You have the data in front of you, and you make trades based off of that data. That's it. It's not, you know, it's not hocus pocus beyond that. So hopefully you guys can understand that. Hopefully that a day like this is a testament to that, yeah, even if everybody's expecting, you know, 75 basis points, if, you know, if we have analysis like this telling us that, you know, this is what happens every time, it doesn't mean it's not going to happen just because everyone thinks it will happen, right? There's not some sort of shadowy mechanism that's there to crush people's expectations. It's just, what is the smart money doing versus what is everybody else doing? And while everyone else is bearish and, you know, thinking that there's going to be a ton of volatility, which there is. The smart money is like, okay, when stuff is priced in and the market makes a low for the day, that's when we're going to jump in and make our quick money, kind of like we did, right? And you don't have to trade for the rest of the day. You know, if you traded one futures contract, you banked almost $3,000 today. So, you know, and you could just sort of chill for the rest of the day and enjoy your profits. So, yeah, hopefully that's a testament to that. 25-1 says it's tanking. Yeah, but guess who took profits? Guess who already took? It could do whatever it wants right now. The market can do whatever it wants right now, right? I don't care. It can tank. It can rally. I took my profits, and I'm gonna have a nice dinner tonight. So, for people who bought stocks and it rallied till when we should hold, one, I mean, I wouldn't try to swing trade today with stocks. You need a leveraged factor like futures or options. Stocks are not going to give you the gains that you want. Also, if you bought stocks, are you buying it for long term, short term? I have no idea what stocks you bought. So, yeah, I don't really have an answer for you. Sorry. It usually pumps the day after. I didn't look at it as much as I looked at what happens on the specific day. So, yeah. All right. Let me get to some of your questions. Now could be a good time to buy long-term stocks. Yeah, there are some stocks that I do like here. Microsoft being one of them for sure. I like Microsoft today. You know, there are here. Let's take a look at some stocks. And by the way, there's a long time left for the market. There's about an hour and 10 minutes left. So we'll see what happens. But in terms of stocks, let's look at Microsoft, right? Microsoft made a fresh 52-week low yesterday. I do like it here. Again, this is for dollar cost averaging for the long term. Really just little by little. This isn't oh, yeah. This is just dollar cost averaging little by little. This isn't really for short-term trades, right? But Microsoft I like. Google, did it make a 52-week low? I think it did. Yeah, Google looks like I like Google here too. Same level as February 2021, right? New 52-week low. The triple Qs, you know, are down 30%. Anytime they're down 30% historically, you make good money buying it. So I do like the triple Qs here. Google, Microsoft. Apple's a bit high right now. I wouldn't buy Apple at these price points. But yeah, market is rallying again. And I just jumped into more futures contracts, by the way, while I was here with you guys. So yeah, currently up on those to another $2,000. Likely going to close them. I don't know. I may wait. Do you still have a Patreon, Daniel? No, I don't. You do have to make an appointment. It's a free call, so make an appointment with one of the ambassadors below. Click on that link. Again, as I said, sorry, I'm just closing out my positions. Want to lock in another $2,000 here. 1 second, sorry. Come on. There you go. Nice. Sorry, what were you asking? Oh yeah, click on the link below. Book a call with one of our ambassadors, and they'll get you hooked up. But yeah, there is no Patreon. We closed those. We wanted to keep the group tight knit. We wanted to keep the group intimate. So yeah, I closed the monthlies, right? Those who were part of the Patreon are grandfathered in forever. so I'm not going to change the pricing for them. But yeah, book a call if you want to get in here. Do you have an OnlyFans? No. What do you think? You think I should start one? I was thinking about streaming on Twitch, not pornographic or anything, but not only market talk, but also, you know, maybe like more pop culture stuff, political takes. Like I'm interested in a lot more things than in the market, science stuff. So I don't know. 3,900 seems to be resistance again. Yeah, super resistance, but I think it will be broken by end of day. I think the markets will end up at least 2% up. My Discord subscription just ended. Any shortcut to renew it? No, you'll need to book a call. Click the link down below. Streaming on Twitch for the win. Yeah, let me know. For those of you guys that and girls that watch Twitch or stream on Twitch, let me know. Let me know if that's a good idea. Would love to get in on that. Do old Patreon members still have access to the same? Yes, you guys do, but obviously you don't have access to the courses if you didn't buy the course separately or the Zoom calls, whereas the people in the academy, they get access to everything. So you have access to everything and it's lifetime. You get the courses, the Zoom calls with me for the rest of my life until I'm alive. So yeah, click that link in the description. Again, we only have a few spots left for September. Before they're closed again, and then likely open them in October. Microsoft's the only one I picked up besides trading options. Yeah, I like Microsoft. Google, I think you can afford to wait, but I don't mind Google here either. People who sold yesterday are panicking. Yeah, I'm about to get back into this futures contract. Sorry, because we're at a technical level here. We are at a technical level here. Do you guys have any questions about trading, about futures, about any of this stuff? Let me know. But I'll show you what I'm looking at here. About to go in for a third, fourth, fifth time, but I'm looking at the 1 minute chart here. And I'm about. I should have. That was a perfect entry, by the way. That right there, the bounce off the POC, the 21 EMA confluence here, that might have been the perfect entry here. And I'm trading ES contracts, by the way. If you have a smaller account, you want to trade MES, okay? And if you guys have any questions, now is the time to take advantage of this. Use this like a Zoom call. Ask me any question you want, and I'll answer it for you. I might jump in here. I might jump in here and then average down. Or, let's see. All right. Nice. Already up $100. I might just hold this until... because we're up already a few thousand today, but I might hold this until we get back to that 39.18 level. Or if we break below VWAP, then I'll probably close it and then reopen it below. I do think we're going to end the day green. And obviously we've gone in a few times already. So, you know, right now you're playing with what's called house money. But yeah, if you have any questions about futures or trading, again, I mean, this is really the first FOMC live stream that I'm actively trading a ton. So apologies if it seems disjointed, but I'm trying to get in on the action because this is one of the easiest trading days of the year. Hope and where to buy futures. Thinkorswim is what I use. On what platform? Thinkorswim is what I use. How much is that contract? The collateral for a futures contract, for an ES futures contract, is $14,000, $14,300. But there's MES. MES is a tenth of ES. So MES trades at a tenth of that. So it's $1,430. But it is the way to go if you don't want to be subject to theta decay. All right. Let's see. This thing is wanting to pump again. Maybe. Let's see. Yep. All right. Already up $300 on this contract. It's having trouble getting above this fair value gap that I have drawn on here. But once we get to like, you know what? I'll actually set it to 39.18. And so that way it sells right when we get to that level. Maybe I'll do 39.1775. So in Thinkorswim, the beauty of this is that you can actually, see where your limit order is drawn, right? So I have my limit order drawn right at resistance. So the minute that the futures contract hits that, it will take profit, right? Whoops. Oh, I forgot that this was still going on. So we'll let that sit, and if we cross below VWAP, I will likely close it, but otherwise we're going to let that sit. I was on monthly subscription but can't access it anymore. Yeah, if you exited, unfortunately, you have to click the link below and book a free call with an ambassador. There's no link to, there's no link to get back in the monthlies. Is there a video showing how to set those trades on TOS? Yes. Look up the Traveling Trader futures. What is the ticker symbol on futures? /ES or /MES. Do you ever trade Forex? No, definitely no. I don't care for Forex. Do you guys have a course on how to buy futures? I have a free video on futures. Just type in the Traveling Trader futures. Why did it drop 30 minutes before the meeting even started? Cameron Collins. Well, if you paid attention, Cameron Collins, you'd see that it does that every single time before the meeting starts. Look at this, 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 look at this. We don't compile these stats for no reason. We do it for your own sake. All right. Nuno C. Just book a call down below. Just click the link and book a free call. I think my learning curve are the terms abbreviations, not so much a question. Yeah, we will be setting up an education section for that, by the way. So just look out for that, where we'll put all the abbreviations together. Market is bull flagging right now on the 1 minute, by the way. And that 3,900 is such a huge point of resistance. It's crazy. It's been that way for 4 days. If you look at 3,900 on the SPX, like if we look at, say, like a 15-minute chart, you'll see it, right? It's like this level here. So yeah. Overstock better than Etsy. I don't know. Those are both very shit stocks. So I don't, just trade blue chips, man. Just buy blue chips. Right? Like, why would you buy Etsy when you could buy Google or Amazon or the triple Qs or Microsoft? Like, why? Honestly, why? Thanks for that QQQ and SPY chart. Yeah, no problem. Can we enter Thinkorswim in web? Yes, but the web app is not great. The web app is not great. So, yeah. To set your triggers or just limit buys? Will you market buy if it's running in the direction? Depends on the bid-ask spread. Very good question. So when you look at the bid-ask spread here, right? When you look at this right here, this is called the bid-ask spread, right? If the bid-ask spread is very thin like it is now, and I really want to get in, then yes, I would definitely do a market buy or market sell. But yeah. Any other questions about trading? Wow, this is really sitting at 3,900. That is crazy. That is crazy. Let's look at the futures because that's what I'm trading. This is where we made that money, right? Like when it dropped to this level here, that is when the alert was sent out in the Discord. I mean, again, like and I don't mean to, I'm not ragging on anybody. I'm just saying these are very newbie mistakes and anecdotes that people use. Like, oh, if everyone's expecting it, there's no way you can make money. Well, yes, there is. If you are trading based off of technicals, based off of data, and you have a high risk to reward ratio. So when we plop down here, right, 39.43 is where that contract was taken, which was the exact low that you see from back yesterday, right? Literally hit that mark. I was live streaming, so I got in at 39.44. But the Discord got in at 39.43, which is exactly the low. Now, we went a little below that. We got to 38.32, but you're not going to know, you're not going to know that level. Once it comes down here and grabs liquidity and then starts coming back up, that 39.43, you're catching it on the way back up. So we caught this entire wick here, right? This is the 15-minute chart. Really, you're going to be trading off of like the 5-minute or 1 minute. And now we are getting stopped out here, right? But I do think that we have an hour left. It'll be interesting to see what happens. But we already made our money for the day. Right now we're playing with house money. So I have a contract here just waiting for it to take profit at 39. What did I say? 39.18. And I'm happy to wait for this to play out, right? Now, if we break below VWAP, which I don't have here, but I have on my Thinkorswim, you see it here. VWAP is the purple line. If we break below VWAP, then I will exit this trade. I will have suffered a little bit of a loss on this one contract, but I mean, you guys saw me trade a bunch of contracts live already. So, I do think that this bull flag, if it can be broken, we will ride momentum to maybe 2 to 3% on the market. But this 3,900 is such a strict and what do you call it? Not strict, stubborn. That's what that's the word I was looking for. It's such a stubborn level. Really going back to September 15th. Fuck. I didn't realize it was that far because I was looking at a more granular chart. But this double bottom third, if we can break this today, yeah. You'll see the market fly. Let's see. Let us see. And if it ends up here, like if the market closes here, I mean, we'll still be green. We'll be over 1% on the NASDAQ, 0.68% on the S&P. But yeah. Let me get to your question. Sorry. Thoughts on Disney or Ford? Disney, okay. Ford is shit at the moment. You're battling against on Ford. You're battling against a lot of headwinds. So they just came out and said that they're not going to meet their production numbers. Optimal entry into Etsy. God, why are you guys obsessed with Etsy? No Etsy. Up to you, but not for me. Rhodes, why buy Etsy when you could buy a sub to this channel? Downside of holding something like Soxel. The downside of holding something like Soxel? What do you mean? The price can go down. That's the downside. What's the downside of holding any stock? We sold cash secure puts on Soxel, which would put our price at around $5 if we got assigned. $6, I think, if we got assigned. So, yeah. There are 1,100 futures contracts sitting at 39.18, 39.22. Yeah, it's going to be a tough nut to crack. So we'll see. Anonymous donated $5 to St. Jude. Thank you so much, whoever that was. I have a little in my account to trade. What can I do with options? Don't trade options if you don't have the bankroll yet. What you can do is practice with paper trading until you get your feet wet. And then once you're comfortable and, you know, hopefully you have a job, and you're building a bankroll through your job, then at that point, you know, you could trade options. But if you don't have a lot of money, options are not a tool used for gambling. You don't want to do that. All right, we're breaking below VWAP. I might close this trade here depending on if we get a bounce or not. Let's see. Do we close here or not? Let's see. I could sell calls and puts. I heard of spreads. Will that help? Trust me, you don't want to trade options if you don't have a lot of money, especially if you don't have experience. Just trust me on that. You're going to blow up your account before you know it. Yes, trading spreads, that is beneficial, right? You are going to, you know, trading spreads could be beneficial if you learn how to do it, but you don't want to, oh shit. What am I doing? How much future contracts usually cost? I went over that in the video. ES is 14,300. MES is 1,430. You have to close your futures position today by itself, as we are hoping a continuing uptrend and it might breach that level, especially with no theta decay, because I want to lock in profits. How much? Oh, I already answered this. TQQQ turn bear. If SPY breaks, puts down to 380. Okay. What do you consider a lot of money for an account to start trading options? Arbitrary question. Doesn't have an answer. Really depends on your skill level. All right, guys. I'm going to hop off the Discord. I mean, I'm going to hop off the live stream because I want to get back to trading. Trade the last 45 minutes. But yeah, do you think Netflix will continue to go up? No, I don't. Not in the short term. All right. Yeah, thank you guys for joining. Thank you for those that donated to St. Jude's. And I will catch you guys on the next live stream. Hopefully you learned something. Hopefully you guys were able to catch the trades. Hopefully a lot of you made some money on the futures and calls that we put out. Right after Jerome Powell started speaking, made bank on those, made a few thousand on the futures contracts themselves. But yeah, please stay on the show and show us what you're trading. No, I honestly would rather jump off because I'm going to be trading with the group and I do need to have every ounce of concentration here in the last 45 minutes. But yeah, love you guys. Talk to you guys in a bit. Peace.